Hey, everybody, it's Eddie from Tokyo. This is your cryptocurrency update from Japan, and we're going to look at ODL, the on-demand liquidity, which uses the digital asset XRP, always, as usual, and also a bit on regulations from a media briefing that took place with the Bank of International Settlements, the BIS, on June 1st. And to wrap up, before the fluff, we're going to get some very insightful and educational info from the three largest liquidity providers in this space. But with yesterday's news regarding SBI's investment of $30 million in the liquidity market maker B2C2, that story really has legs. The financial world especially is covering this story globally. The Berkshire Hathaway company Business Wire had a very big story. There is the Europe World News, Bloomberg, Business Insider, Financial Times, a real sizable amount of coverage outside the crypto-centric space, and it's crossing over into the traditional world of finance. This is really good. It's really important because it really increases the awareness of the digital asset XRP among those investors. I was feeling a bit bullish yesterday because of that news, and I picked on Pomp again with my tweet. I really must stop this, but well, his recent comments it's waking up the bulldog in me. I used to work for a California startup, and the CFO used to come into my office and sing "Who Let the Dogs Out." I have to admit, I do have a little bit of a relentless streak, so I am talking out loud and giving myself advice to stop doing that. And it appears that SBI just got started. In the release, they are taking the position of promoting mergers and acquisitions in Japan and overseas as an important strategy for realizing dramatic growth in the future. As a company engaged in crypto asset businesses, this is really strong language because from a Japanese point of view, often the language is much more modest. So I think this is just getting started. And there is some speculation going on, and I will just touch on it briefly because it's a little out of the norm. It's a little unusual, and it's coming from the ODL tracker, the liquidity scan the utility scan that tracks this ODL. And there's some movement between BitThumb, which is in South Korea, and BitBank, which is here in Japan. And BitBank is the largest exchange when it comes to XRP transactions. And what's unusual about this is that they have tracked some fiat that's moving between the two, that's unusual to have won and yen being transferred. So it's suggesting that maybe a corridor is being developed or tested. It's not confirmed, but not unlikely, as there have been 3 recent additions to RippleNet customers in South Korea. So a new ODL map, I just noticed, is on Utility Scan, and it's fun. It's very fun. We're looking at the real time right now. Let me refresh this page. It has an interesting sped up version of ODL that is spotted in terms of transactions. So it'll last for about 1 minute. And this is actually a representation. Wow, look at that. Oh my gosh, a ton of I've been looking at this for the last few hours. I never saw a stream like that going from the United States to Mexico. There's been a lot going over to the Philippines. Yeah, I just never saw a stream like that going over to Mexico. I don't know. So I guess and then look at this. This is funny. Oh my God, $11,000 was spotted in USD going to Mexico. That's funny. So when you view this, you're looking at a 3-hour span. And if you then let it run its course for about a minute, it'll go back to real time. It's kind of fun. You know, it's not precise, but it does show some indication of real transactions that are being spotted, but we don't know exactly how many of these are ODL. Yep, you can see the different corridors here. We've got the Europe corridor, UK, Mexico, United States. There's Brazil. I was watching this for a long time earlier, and there was just no movement coming out of Brazil. So quite possibly it's not live yet. You've got Nigeria here, which I think is going to be very, very soon. And there's Thailand, there's South Korea, and there's Japan. And and Australia. Sorry, I forgot the Aussies down there. Okay, so anyway, I'll put a link to this down in the description below. What did it just see now? It just saw 9,000 spotted in euros to USD. So anytime there is some significant transfer, the the funny little talking head of David tells you where that transaction occurred. All right, let's keep it moving here. Oh, and you know what? Look at this. You can see my coil working very hard on the lower left of the page, streaming micropayments to the site owner. Yeah, that always feels really good. All right, we are going to jump to the BIS. This is Augustine Karstens. He's a general manager of the Bank of International Settlements. And it's interesting because he was asked, this is a Q&A, and someone asked him about digital assets, especially since there's a little bit of a scandal going on with the wired card, and it looks like they're, I'm not totally up on the latest with that news, but it looks like it's definitely fraud. And Mr. Carson is being asked about what precautions the BIS might take in the future to prevent this kind of situation with digital assets. And he refers to this chapter 3, which I'm going to touch on because there is a new bit of information that came out in terms of regulatory thoughts for this chapter 3 that just came from this camp. Okay, let's just listen to this portion. It's not long. It's from 1206 to 1333. Have a listen.
Excellent. So my question, I think anyone could be free to answer this one. It's just the fact you've got obviously there's a chapter you released a few days ago on digital payments and central bank digital currencies. And it's very much a message that we're kind of embracing this world more generally. So just in light of the Wirecard scandal that's broke in Germany, I mean, what lessons need to be learned as a result of that?
So give the question to Hyun, please.
Well, let me start. Thank you very much for your question. Well, I mean, what we do in Chapter 3 is to anticipate that as developments in the payment systems area and innovation continues, one of the key aspects will be how different non-bank participants and payment service providers can be incorporated into the whole scheme. There certainly there is a mushrooming of many of these participants joining into the payment system, and therefore I think that the regulatory and supervisory perimeter will have to be enlarged.
So that chapter 3 that he's talking about is an actual big tech in finance opportunities and risk economic report that came out on the 23rd of June. There's 3 takeaways, just briefly. They are thinking that these third-party fintechs like Ripple are promising because they provide those efficiency gains. Secondly, they want to ensure a level playing field, that there is fair competition. And that's important because remember, Facebook the WhatsApp was actually halted in Brazil because they didn't feel that it promoted a level playing field and they thought that the competition was unfair. And thirdly, there is the issue that they still want to get around, which is the data protection. So again, I think they are still a long way off to make clear recommendations for regulation. I'm following because it's this part of the story for ODL is very important. All right, let's go to this very scrumptious panel discussion with Bitstamp, who of course is an ODL friend. And then this is what is it, Simon Cowell on the far right. He's the head of corporate development. And then in the middle is Mark Bargava. What is this? Mark Bargava, I think it is. Yeah, he is with Tagami. And then to the left is Max Boonen. He's the CEO of B2C2. That is the liquidity provider, the market maker that just received that investment from SBI. And the first question is good because everybody's always talking about in this space, when are the big institutions coming in? Where's the institutional money? We hear this from media. We hear the YouTubers talking like, they're coming. But you're going to find out as of this panel discussion, really, the smaller players have come in, but not the big guys. And we need to have that list of big players in this space because they are really going to be the ones that can move the price, according to these guys. And I believe them. They are the three largest liquidity market makers in the space. So when the institutional investors come in, I think we are going to see a lot of movement. Now, listen to this beginning here, because I think a lot of people don't really understand the term institutional investors because there's so many layers. And what we're waiting for are the asset managers. Okay, listen to this part.
We were just having a quick chat backstage. And there are no contrarians here, no one who doesn't think the institutions are coming. So I thought it'd be helpful just to start by thinking about what we mean by institutions. It's a very broad term, one that's, I think, overly used perhaps in marketing. So maybe Max, you can just, because you deal with institutions a lot, maybe just expand a little bit on the confines of what we mean by institutions.
Yes. Well, if there's going to be a confound today, it's going to be me, I think. I think a lot of people in crypto don't really know what they're talking about, to be frank. And institutions, a big misnomer, because there are so many institutions out there. It's a big space. And what people tend to forget is that I think all institutions, at the end of the day, cater to the needs of the general public. So it doesn't matter how many layers you have, but if you're a pension fund, at the end of the day, it's people like you and I putting their savings into pensions. If you're an insurer, you're insuring some risk that at the end of the day is borne by retail, right? And so you've got also of institutions that cater to the needs of the general public, and it's not like there's a pool of money out there that sits outside of reality, and then we're just waiting for them. In fact, a lot of institutions and very big ones are active in crypto right now. It just doesn't happen to be necessarily the ones that we've heard. But coming from the prior to interest rate swaps or traded FX swaps, if you look at the foreign exchange market, for instance, Japan, 30% of the EFX book of a bank, it's basically Japan, right? But the names there, they're not well known. You look at like a GMO, a DMM, and Hirose. Have you ever heard of those names? No, you haven't. Yet they're absolutely massive in FX. You look at typical bank like, a Barclays, a Goldman, every day in EFX, they do maybe $30, $40 billion a day. The biggest brokers in the world, the retail FX brokers, they can do like $100 billion. So they're bigger than banks. So they're absolutely monster, massive institutions, and they're active in crypto. We trade with them. 80% of my volume is with regulated institutions, but it's not something that the man on the street has heard of. But it's not because BlackRock is not in crypto right now that the institutions are not active. I'm sure BlackRock one day will be, but to me it doesn't really matter when they come in, because the people that need to be in crypto, they're in crypto today.
Yeah, I definitely agree. I think, though, there's a distinction between sort of the trading institutions and the wealth managers, and it is the latter that will move prices. So generally, people really are very interested in when will BlackRock, when will asset managers come in. So I think it's very active on the trading side. Brokerages, FX firms, market makers are all, moving into the space, and they provide liquidity. But the other side of the house, the asset managers, frankly, are not in the space, so they're investing indirectly. So a good example is one of our largest investors is Paradigm. They have Yale's endowment behind them and some really big asset managers. Another investor of ours is Morgan Creek, which has a couple pension funds. Pantera and others are also investors, but they're all indirectly doing it through crypto funds, and they're allocating very small amounts. So I think a lot of the public is very interested in when that asset management side comes in, because that's fundamentally what will drive price increases, which at the end of the day is what a lot of people care about. So I think the trading side is really important for the liquidity, for the tools, to create a framework, especially a regulatory one, to get folks in. But we are all still sort of waiting on the asset manager side, and I don't think there's been a lot of direct involvement there.
All right, so I get the question all the time, why the price isn't moving. Well, here you have real experts in the space who say that the asset managers are going to be able to move the price. So just sticking with that, when we look at the smaller players, the family offices, they're in, and the asset managers, the top six, BlackRock, Vanguard, UBS, State Street, Allianz, Fidelity. Fidelity has made some movement in this space, but that's just six. We've got 70% of all the assets tied up in these big asset managers, these wealth funds for pensions and for insurance. And the list is, more than 100 different companies long. So even though you might say, well, Fidelity did get in, or Vanguard did get in, or however, it's just scratching the surface. And so you want to really get to the core of this entire list of these notable firms that are around 100 before we start to see some impact. All right, have a listen to this. This is Mark from Tagami, and he has something, and in addition, very, very interesting to say here.
Yeah, I think you need to see retail interest and real use cases for the larger asset managers. So there used to be quite a bit of push in late 2017.
What's going to bring, sorry, I should have set that up a little bit better. What's going to bring the asset managers to the space? And he's giving his thoughts on that.
For Goldman's private wealth or other private wealth groups around the world to start really looking at it, and that push has gone away. So to a degree, I think it has to be dictated by, like Simon said, more family offices pushing the asset managers that they're really interested in it. On the Tagomi brokerage platform, we have family offices like the Bailey family as a client and investor. They run Cambridge Associates. Cambridge Associates has obviously encouraged more people to look at it. But you need those family offices. You need things like ETFs where there's huge retail desires coming out of it. But retail is going to have to push institutions here. And a lot of this recent price movement upward has not been by new entrants into the market. It's been the same entrants buying on pretty low liquidity. So you do need kind of that retail push. And then the second is use case. I mean, there's a lot of very, very interesting projects. I've been investing in kind of the base protocol layers for 4 years now, seeding, companies like Algorand or Blockstack. But the reality is there are not large use cases in the space yet outside of Bitcoin as a store of value. Ethereum is probably still the clear leader in the smart contract system, and there's a lot of changes going on there. And so there's a ton of excitement. Many of the projects are super cool, but honestly, they're more like seed stage companies than large use cases. So I think the second thing is asset managers are not the dumb money; they're actually quite smart money, and they're waiting for a lot of use cases to actually be proven out, which is obviously what people in this room are doing. But it's still very early days for them. So I think both retail interest and real use cases at scale are the things that would drive these larger asset managers. They're not going to be taking a risk before either one of those things.
So the asset managers, they are smart money, not dumb money, and they are waiting for some of these use cases to be proven out. But utility is absolutely what they're looking for. And I feel very confident that XRP is going to be proven as a utility that actually shows its worth. And so I think, you know, for a person like myself who is on this side getting the question all the time about price, I think this panel discussion addresses it, and these guys are spot on. They know this space very well. All right, I'm going to put a link to the entire 30 minutes in the description below. It's just great. I didn't want to tie you up with too much of it, but this is one of the best panel discussions I have watched in a long time in regards to a perspective from the liquidity providers, the market makers. And we all know how important that is with the whole equation of on-demand liquidity. All right, I am going to talk about Sam I Am. He, of course, on YouTube is To the Lifeboats, and on Twitter, it's Green Eggs and Ham. And what I really seriously want everyone to do who's watching this video is vote, nominate Sam, because he made the final 5 for the Influencer Award nominations by Binance. It's just fabulous. He is one of the 5. You have until July 5th to do that. And you just fill out a really easy Google form. It's just, you know, click, fill it out, submit, and then he will have a chance to be hopefully nominated #1. I think we need some fresh new faces in this space, and we need a little more balance. I don't think anybody would argue with me on that. So please go vote for Sam. Okay, we're jumping to the fluff, everyone. This is just some examples of people in Japan who have a lot of artistic time on their hands when it comes to food. These are sandwiches. It actually is coming from a company in Omotesando, which is a very upscale shopping district of Tokyo, and it's the store called Initial. They're very famous for their parfaits, but they're doing these beautiful sandwiches with flower designs using fruit. How about that? I think it's very unique. And also, I couldn't help but share with you the Pikachu engagement rings that are available in Tokyo. This is from the Tanaka Jewelers in Ginza. They're very upscale. It comes in, I think, platinum or yellow gold. And if you do decide to get the Pikachu ring, it'll come with the Powerball as your case. I just think this is great. I don't know if any of you have ever played that app, but it is fun and it is a little addictive. And now I want to talk about somebody who is, I think, very also creative. This is an architect. Her name is Akiko Ishimaru. And she's not only an architect, but she's also a professional cat sitter. And with all her hours of sitting for cats, she wrote a book that hit the bookstores this last March, and it's The Cat and House Anatomy. And it's how to give your cat the best living experience in your home. And I think it's very interesting because then what happened is she teamed up with a very upscale builder here in Japan, the Mitsubishi Estate Residence Group, and she created a cat tower mansion. This is, maybe I can show you, I think I can show you here. Let's see, here it is. This is the cat tower mansion. It's a luxurious high-rise condo with 4 levels, and each level has its own purpose. So let's take a look at those levels. This is just too much fun for me. The bottom first floor is a toilet, and it has a hinged door so that you can easily clean the box. And then on the second floor, the cat can jump into the lounge area, which also has a small window and a planter box. The planter box is a place that you can grow some cat grass. And then on the third floor is what's called the living room. It also has a bubble window and just basically an all-around good view. And then the fourth floor, a sky bed with a fluffy cushion. And the side comes complete with a textured cloth to scratch the nails. Yeah, everybody knows I would need to order 4 of those. All right, everybody, do take care. Sayonara for now. Bye-bye.